have gone live. All right. On visiting us virtually here are Christine Schmidt and on the left, and Nicole Veith in the middle, I guess.
Hello.
All right. Well, let's
There you go.
go ahead and start our meeting here. We've got Justin McGraw here from Conway, Death and Schmeezing to present our audit to us, and then answer questions and whatever we may have of him, and then we'll probably see about the same thing at the board meeting. So,
Yep.
perfect. If you want to have a seat, sir.
Yeah.
A seat
So
up
here,
here.
in the middle.
Yep.
All right. Well, good evening. Yeah. So for this meeting and the actual board meeting, I got a few different handouts. I'm giving you obviously. One is your audited financial statements themselves. The other one is the we call it a management letter, but it's a letter from us as auditors to you at the governance level, which you know what it is. Responsible to both parties, us as auditors, you at the district, and the standards we use, we follow to determine if your financial statements are presented fairly. Big takeaway is right there on page 1, and big bold letters, your statements are presented fairly in our opinion, can't be relied upon for gauging performance of the school district as well as for future decision-making purposes. Then on page 3, we jump into the numbers. So starting with your statement of net position. Statement of net position is the overall balance sheet of the school district. And look at it at 2 points in time, June 30th, 2023 and June 30th, 2024. So you can kind of see where some of those changes happened in your balances over the last year. So starting at the top, current non-capital assets, these will be your cash balances, accounts receivable, amounts owed to you from other governments like the state or the county, other school districts. You see you had a pretty significant increase in those current asset balances in 24 compared to 23. Large part is due to the cash received from your 2024 A bond issuance. Just under $45 million in bond proceeds that were received in 2024. You also have increases in some of your receivables, amounts owed to you from other governments. So you've seen a jump there in those balances. Your capital assets, these are primarily your buildings, equipment, furniture, fixtures, those type of items. And you did have an increase there, some of those bond proceeds that you received in 24, you did spend on some construction costs. So that is the increase primarily seen as construction projects. So these projects that began in fiscal year 24 and will be finished in the future year. Your deferred outflows of resources on the bottom half, your deferred inflows of resources are largely related to the district's proportionate share of Public Employee Retirement Association, the Teacher Retirement Association, net pension liability, and some of those actuarial evaluations that happen throughout or over the years. And then, when there's changes in the assumptions or actuarial assumptions, or there's different expectations of what the PERA and TRA's investments are going to do versus what they actually do, then you see these deferred inflow, deferred outflow balances. They get amortized out over a period of 4 to 6 years through your pension expense. So the changes you're seeing there are some of the amortization of those changes in actual assumptions and investment earnings. Current liabilities. So on the bottom half there, current liabilities, think your routine bills, accounts payable, salaries, wages payable. Another item in there is contracts payable. So you had a pretty significant increase in your current liabilities related to that contracts payable. Another item is you haven't had bonds outstanding for quite a while, so you haven't had interest payable, and now you have these larger interest payments. You look at a liability for that portion that applies to 2024. So you're seeing that increase there as well, and that'll probably carry forward through the life of that bond. On your long-term liabilities, just like you talked about the change in your current assets, the long-term liabilities, bonds payable is now the largest long-term liability that you have. Pension liability is also a part of that, but the sharp increase you're seeing is due to those new 2024 A bonds. You didn't make any principal payments on them in 2024. You probably make first principal payment coming up here in February, so you'll see that balance slowly dwindle as you continue to make those scheduled debt service payments. very bottom, the net position of the school district, so you can, if you sold all your assets, paid off all your debts, this is really what would be left over. And you showed an increase in your net position between the 2 years. And you had that negative, unrestricted, net position balance sitting out there. That's largely caused by those pension liabilities. If you're looking at what the pension liabilities are versus that unrestricted net position, you can see that there's a correlation there between the two. And this is all activities, all funds, all operations of the district kind of rolled up into one slide here. And then on page 4, we start looking at some of the individual funds of the district. General fund is the main operating fund of the school district. If you look at fund balance, as of 2024, that composition of that fund balance, as well as the prior 4 years, so you kind of see what the trends have been on those fund balances. Some of your classifications experienced increases. Restricted fund balance, you get some state funding that came in that remained unspent at the end of the year. Safe schools, long-term facility maintenance, that's driving that increase there that you're seeing in those restricted fund balance.
So like ESSER is all under restricted fund?
So those ESSER
ESSER.
funds don't necessarily create a fund balance. You get them on a reimbursement basis.
Yep.
So you spend the money, and then the federal government pays you or reimburses you for that. So you've already kind of pre-spent the money. You don't have to carry it over at the end of the year to spend going forward. So really what would impact anything would be your unassigned fund balance. They haven't reimbursed you, but typically we try to book a receivable balance from the state government or federal government for those qualifying expenditures that you're going to get reimbursed after the end of the year. So those ESSER not state funds, but the federal funding is largely on a reimbursement basis, and won't impact your fund balance in your general fund. That's not quite the case when we get the food service fund, but we'll talk about that when we get there. So yeah, you have those fund balances sitting out there. Your unassigned fund balance had a small decrease during the year, largely due to the effects of the operations of that general fund. And I'm going to cover on the revenues and expenditures here on the following pages, so I'll dig a little bit more into that as you look at each individual source of revenue as well as the function of the expense. On page 5, we have the enrollment of the school district, again, in 2024, prior 4 years, as well as looking out to what we projected here for 2025. You had a slight increase in your average daily membership, about 3% in 2024 compared to 2023. Looks like you're looking to give some of that back here in 2025. Right now, MDE has it sitting at about 598 students that are coming in the door. And that ADM or those enrollment numbers do have an impact on your state funding and the revenue that comes along with that. And there's a lot of different reasons why ADM varies from year to year. Open enrollment, charter schools, homeschooling is another one that will impact that average daily membership number. On page 6, sticking with the general fund, looking at the revenues and expenditures. So you did have a decrease both in revenues and expenditures. You had an increase in 2024. You're projected to have a decrease in 2025. That 2025 decrease is kind of a result of jumping ahead more of a balanced budget, along with expected decrease in that federal funding as some of those pandemic-related programs are sunsetting here. Most of them did in the fall of 24 here, so you won't have those federal revenues to spend on expenditures going into 2025.
So, kind of looking ahead to page 10, are we not going to be able to continue going, chipping away at our debt on the community service?
We still
Will
have that in
we'll
the
still
plan.
be
We
able
still
to-
have that in the plan.
Okay, was my big question.
Yeah.
Okay, yep. And then looking at the revenues, specifically the general fund, look at these by source. So where is the general fund getting the money that it's spending? Historically, the state source of revenue has been the largest source, and that's no change here in 2024. You did have an increase in your property taxes that was reflected with your levy. That increase in state sources that you're seeing, basic skills funding, new special ed aid or increased special ed aid, along with the summer hourly worker unemployment aid. All those things are kind of driving up the revenue that you're getting from the state and municipal. Then federal sources, you did have an increase in your federal sources of revenue as you try to utilize those those pandemic related fundings. Specifically, you mentioned ESSER, that's one, that, district tried to utilize as much of that funding that was available before, it does sunset here. And then, your expenditures for the general fund on page 8, you had some increases in, several of the categories that we kind of look at: salaries and wages, purchase services, supplies, materials, capital. All those categories did increase in 2024. Personnel costs, wages, it was a big chunk of that. Pension contributions was a big chunk of that, and health insurance. All those items, so it's kind of driving that increase you're seeing in that salary and benefits category. You had a slight increase in purchase services, special ed, pupil support or transportation costs all increased in 2024. Supplies and material, there's some furniture purchase for classrooms, large amounts of furniture purchase for classrooms. Saw an increase in supplies and materials there. And then it increased equipment purchases, looking at like shop equipment, that type of items, those types of items is what's kind of driving that increase on the capital side of things. So all four, the big four categories all had increases here in 2024. And then on page 9, move away from the general fund to the other funds of the school district's food service fund, special revenue fund. The idea behind the special revenue fund is that it will be self-supporting and self-sufficient. And food service fund, it's had some ups and downs in this fund balance. It's up again here in 2024. The state expanded the state paid lunch program, where even with the federal lunch program, the state lunch program, it's paid on a per meal basis, not necessarily a reimbursement basis. So what most districts have found is that the federal government reimburses meals at a higher rate than most municipal schools. It costs most municipal schools to provide a meal. The state program, I think they're starting to see how that's going to impact fund balance of a lot of food service funds. Is that reimbursement rate high enough? Or is it not high enough? As of 2024, you saw that increase with that increased really expanded state school lunch program.
Maybe Christine can answer this, but I thought there was like a cap or max on the food service fund, and
Yep.
where are we at compared to the cap or max?
Yeah, so the max we call it 6 months of net cash resources. So,
Okay.
so basically your expenditures, your operating expenditures, really shouldn't be over, or your fund balance shouldn't be over 6 months worth of those, less than receivables and pool balances. You're under that amount now, and but you're projected to spend down some of that fund balance in the food service fund going forward. It used to be 3 months, but then with the expansion of the National School Lunch Program during COVID, what a lot of school districts were seeing was that fund balance just kind of climb, and one of the big drivers or big tools you have as a school board or school district to control that fund balance is lunch prices. So everybody's getting a lunch paid for at a certain rate from the state or from the federal government. It kind of takes one of your big tools away to manage that fund balance. So you see a lot of schools considering capital improvements, so refrigerators, fueling lines, ovens, those types of things, to try to mitigate going over that 6 month net cash resource limit. And I said it used to be 3 and be bumped up to 6. They said it was temporary, and I haven't heard what their plan is on if they're looking at bringing it back down to 3 or 6 going to be their new normal. So we're kind of all, I don't know, Christine, have you heard anything on that?
They are going to move it back to 3 months. It will not be this school year. It may be next school year, but they definitely are going back to 3 months.
Yep.
Thank you.
There we go. So that's one thing to be cognizant of as you're looking at those food service funds and revenues that are coming in versus what it's costing you to provide a meal.
Quick question. What was the reasoning for the decrease in here
Yeah,
going forward?
So there's some capital improvements are built into your budget in 2025, but the big driver on your budget is increased personnel costs and supplies costs, so school food costs.
But this is less. Am I not reading this right?
Yep. So
We
this.
got 178,600 going into 25, and it was 235 here.
Yep. So at the end of the year, your fund balance in that fund is sitting at 235, and then when you factor in what your revenue's going to be in 2025 versus your expenditure is higher than your revenue, so it's going to bring that fund balance or spend down some of that fund balance down to that 178 balance. So yeah, it's a great question. So as the budget comes out, the actual results come out close to the budget, that's kind of what we expect your fund balance to be sitting, at the end of, 2025 school year.
So you don't want it to be up here.
Not necessarily, no, not for the
Okay.
food service fund, because, there are requirements, it's supposed to be a nonprofit
Yeah.
food service program, so the state doesn't want you generating too much revenues and building up a large reserve, and it should largely break even
It should be.
with operating costs. and
Cover
capital
only what
costs.
you needed.
Exactly.
Yeah.
Okay.
So that's the one unique thing about food service fund. Not one.
Is the reason that we're not worrying about this, the 6 months, is that what's causing us to not have to worry about that this, in 2024, when we have more in there than we did in 2022, and we had to just spend it down by 54,000, I think?
Yeah, and that 6 month, temporary exemption, you're under that cap now in 24. You're looking at slowly spending that down in 25, and I would recommend when you do your 26 budget, take a look at that as well, where you think you're gonna be. And that's tough, because, meal prices used to be your big tool, now you gotta find expenditures, put in there, and then there are some other, things that are allowed, like, if, your fund balance is so high, you can start putting some other personnel costs, like custodial people can be accounted for the time that they have in the food service fund. Trash, utilities, if you can reasonably allocate those to the food service fund, the food service can start paying for some of those costs. I know, MD does have some requirements like an hour study for your custodians, if you wanna put their time into that food service fund and spend some of those proceeds on their wages, you have to keep track of how many hours they spend per day, either cleaning the lunchroom, wiping tables, those types of things, to justify the amount
No,
that they're.
only the kitchen.
The kitchen,
It can only be their time in the kitchen.
the kitchen.
The lunchroom is not included.
Ah.
So we can do an indirect chargeback. If your fund balance is too high, we can do lunchroom supervision. There's a small amount of chargeback, but custodial is kitchen only. So there is a little bit, but we did project a deficit last year, and we are projecting a deficit again this year. So I would be curious when we go through the revised budget, how much we're gonna eat away at that. Because it has been, it did go deficit last year, we are expecting it this year too. So what is the trend this year and then going into next year's budget? They might be pretty close, especially if we did do the indirect chargebacks. So
Thank you.
it is kind of on your radar.
That's good, yeah, keep it on your radar going forward. Community service fund on page 10 has kind of the opposite problem. It's a deficit fund balance, and it did see, an increase in that in 2020, or like I said, decrease in the deficit in 2024, largely due to transfers from the general fund. So that transfer from the general fund to, community service fund is helping try to correct that, that fund balance deficit, that continues going forward. I see here, you kinda had a balanced budget for the community service fund going into 2025. So, if that's the case, you wanna see that impact, on fund balance, but another transfer is made into that fund, 25, you can see, keep chipping away at that deficit fund balance. It's kinda tough, this one is this one does include the swimming pool, fund as well, the swimming pool activity or operations, and that seems to be one of the tough things to keep under control and fund itself is that swimming pool. Debt service fund on page 11, you had an increase in fund balance, you didn't have any debt service, really big debt service expenditures in there yet, because you don't have maybe first principal or interest payment here in 25, first principal payments coming in, or due in 25, so that increase you see in there is just interest on, the deposits being held by the debt service fund. I expect that you'll see more activity here in 25, you start making all those payments, and I think your levy is set accordingly to cover those principal and interest payments, so in 25, you'll see probably a little more activity in that debt service fund as it goes more active. And then the building construction fund, so this fund's been dormant for a while now. We did issue those bond proceeds, all those bond proceeds went into the building construction fund to pay for the cost of construction. So you see you have a lot of cash on hand at the end of the year for the bond proceeds. That'll be spent down going forward as the projects continue, construction continues, the and pay requests are received and made. Then in addition to the numbers, we also audit compliance in the district. We audit compliance with a few different rulemaking bodies, one of them being the state of Minnesota. So compliance with state statutes, things like contracts and bidding, depository public funds, issuance of debt. We're happy to report we came across no issues of non-compliance that we felt rose to a level of financial finding. So that usually tells us a couple different things, and one that your team here knows what those laws are, and two, they're making sure they're being followed. And then government audit standards on page 14, look at internal control of the district. And we have two deficiencies that we noted. If you sat through the presentation before, you probably heard me talk about them. One will be limited segregation duties, and the other one being audit repair financial statements. So with the limited segregation duties with a smaller office staff, it can be difficult to break up every part of the financial reporting process from who has the authority to authorize an expenditure, who's recording that, who has custody of the assets used to pay for that expenditure. So I really like to use this as an opportunity to address the board members. You're another set of eyes in that process and another check and balance in that. So if you're looking through the board packet and something doesn't seem right, or a vendor doesn't seem, or seems out of the ordinary, ask that question. Ask the question to your team here, get your answer. It'll help. That always helps people know you're checking stuff, right? And the audit repair financial statement. So while what we gave you is all derived from your financial records, we did put it in this format, and we have to disclose that as well. And then single audit, so the use of federal funds. So single audit is really just use of compliance on the use of federal funds. So the federal funds you received from, from all this pandemic funding or Department of Education, you're using those funds for their intended purpose. And from the testing that we conducted, we came across no issues of non-compliance. So again, great job to your team here to make sure that those compliance rules are being followed. And then in addition to the financial statements, I mentioned we have that thinner bound document that you have. That's our, we call it a management release letter from us as auditors to you at the board level, but you know how the audit went. Any change in your accounting practices, disagreements with management, or any recommendations we may have. And I have a few recommendations on page 16 that I kind of wanted to discuss with you tonight, and I'll discuss it with the rest of the board members at the board meeting. But one was being authorized signers. So you have people that are still listed on your bank accounts as authorized signers, and they're no longer an employee here. So that's one. If you just contact the bank and get new signer cards done, you get them off those accounts. Timely payment of bills. So during our testing, we came across a few instances where bills weren't being paid on time. We got 35 days to pay your bills according to the state of Minnesota. It wasn't systemic, but there were a few issues where the bill wasn't being paid, finance charges were being applied, and this was essentially paying more for those services or those goods. Contracting and bidding. So the state of Minnesota has kind of an online joint powers platform where you can, the school district can look at purchasing materials, anything, well, there's supplies, equipment, materials over $25,000, and you can go on there and see what other vendors are offering for those prices. And one of the things is, for state law, you're required to check that cooperative purchasing venture, excuse me. Anytime you purchase anything over $25,000, that's equipment or materials related. We came across a few instances where that was not being done. So, get on, I think you are registered for the website. Make sure when you're looking at purchases over that $25,000 threshold, what we usually recommend is go on there and say it's a ban. When you're typing the 2024 ban, return the result, print that off, throw it in your file with your other quotes or bids or whatever you may have, and that way you'll have your documentation that you consider the cooperative purchasing venture. Fraud.
Explain that to me again. Okay, so like if we buy some, say we're going out and buying furniture or something, we go onto this site, or somebody does, who usually did that?
Usually a business manager.
Okay, would go onto the site and check there first to see if you're getting a good deal or
Yep.
not, basically. So to say, okay, this is what you should be kind of paying, don't really go crazy and pay more than that.
Right, yeah, you don't have to buy from the cooperative purchasing
Right,
venture,
but at least-
you have to consider it. And
Yeah.
I think the intent behind that law is, to see if, are you getting a fair price? Here's
Right.
what other vendors are offering this same
Hmm.
good for, and maybe the deal is so good that you do choose to go with the cooperative Or what we see a lot of time is, people or local governments will use the CPB as saying, hey, local vendor, can you match this price? And a lot of times the local vendor will say, yeah, we can do that. And you kinda get it for that same price as the state asking price on this.
So how often did we not do that? Can you tell how often you
I
didn't?
think it was 2 instances that we came across, if I remember right.
How
I think
much,
it was in
was
the
it quite a difference?
So one of them was the school board, I remember that, and I don't know what the price would have been on CPE. I don't have access to it, because I'm not
Right.
a local government employee. But, I think the school board was one, I think there was another shop item.
I know the scoreboard, wasn't the scoreboard donated anyway?
No.
But we still have,
No.
oh, this is a different
This is the
one. Oh, that
new-
one, oh.
The one that's out on the football
Yeah.
field, I'm sure is the one that's
That was
being spoken of.
Daktronics maybe? was the
Yeah.
vendor. Yeah. So yeah, something to keep in mind as you're looking at these larger purchases, hey, do we check the CPE?
What was the second one, did
Yeah.
you say, scoreboard and
I
what?
think it was some shopping equipment, if I remember.
You know, so there, I know there was one thing that, that Rob Vanderhagen had on his list, a dynamometer, and there was only one place in the country that actually makes that piece of equipment.
And so if you check CPE and it returns no results, we still recommend printing that out. At least so you have to say, hey, we checked it, there's nothing there,
Sure.
cover your bases that way.
I didn't even know we had such a thing.
Yeah, it's kind of a, I mean, it's a unique, thing that the state of Minnesota does. There's some other national ones that, maybe Sourcewell is one that, a lot of local governments will use as well for, kind of capture that nationwide versus
Mhm.
just maybe Minnesota vendors. There's some good ones out there that, it'd be a good check to make sure you're getting a good deal, or at least a fair deal on some of these larger purchases. And then, the next one I have for you was fraud reporting policy. So, obviously, when we came out this year, there was some questions around some purchases that were made and where some equipment was. And so we talked to a few employees, and we kind of asked them, one of the things we like to ask them, okay, so let's say if you think somebody's stealing from the school district, what do you do? And some people, I guess I need to tell my supervisor, or I don't know who I should tell, or who should I report it to? So this might be a good opportunity to get a fraud reporting policy in place as far as, hey, if you see something, say something, here's who you tell, and here's kind of that process that's gonna go after you report a maybe a suspected or potential fraud.
So I sit on the policy committee and I can work that through.
Yeah, and we have an example policy that we provide.
Yeah, Justin,
Yep.
he sent me one.
So, yeah, you can tweak it to fit, your personnel and your situation, and at least that way, everybody knows, hey, if something doesn't seem right, I can open it, I can pull it out of my desk, I can open it up and say, okay, here's what I should do. And then credit card purchases, was another one we came across, where there was purchases made with a district credit card that didn't have the supporting documentation, to support those purchases, so, then you already have that policy in place.
Yes.
Just to make sure that it's being followed as those credit card, bills come in, we should be able to trace everything on that credit card statement back to an original receipt. And then journal entry approval, so as,
I got a quick question, going back
Yes.
to credit cards. Do you recommend 2 people checking the credit card statements?
you know, it wouldn't hurt to have an extra person in that process.
Yeah.
Maybe it doesn't have to be every credit card statement, but spot check it every once in a while.
Absolutely, like where I used to work, we always have 2. I do it, and then I'd hand it over to the supervisor, and I'd make him look at it again.
Mhm.
Cause there might be something in there that either I coded wrong, or I didn't catch, or something that wasn't quite right.
Yep,
And he would always take that second look and go, oh, let's code it to here, or something.
okay, yeah.
So,
I think-
I always thought it would be a good thing to have 2.
I think that's perfectly fine. It's not, I don't wanna make it too cumbersome with cost benefit,
Right.
be there, where it takes too much time, or it's too much of somebody's time, but, maybe some of the recent activity, maybe it'd be a good short-term
Yeah.
thing to say, okay, we're gonna button down on these things, and everything's gonna be checked not by one person, but by the second person. And then journal entry approval was the last one we had, so, adjusting journal entries are made to adjust the district's balances. Usually you want the person preparing the entry and, the person making the entry, and the person approving the entry, be different people, so that you get another set of eyes, so you can't, maybe it's, whether it's due to error or fraud, it's not flowing through, software, your accounting balances or your information, without really somebody checking. So it's always a good practice to have the person who's preparing the entry and making it be different from the person who's approving it. So, that's another item that we have there as well. And then, on the very last page is my contact information, so if anybody's looking at the stuff more in their free time and they come across questions or they want more information from me, they can always reach out, call, email, or stop by our office in Litchfield, I guess. So does anybody have any questions, as we sit right now?
Well, you answered for me as we went.
And we went through it, which was
Okay,
nice, so I don't have to try and remember what it is.
Right, right.
I'm not getting any younger.
Good, well, I'm glad, appreciate everybody's help here at the district. I know it's kind of a rocky one this year with
Yeah.
some of the employee issues, but, and also Christine and her team over there, we appreciate them helping us.
Thank you, girls,
get us
thank
through
you
this.
all for getting us through this
Yes.
This,
last 6 months,
yes,
or 4 months, I don't know,
Yeah.
seems
And-
like forever.
And our plan going forward is, we did interview a couple people, and we think it's not a good time to make a big switch, so like you had kind of recommended this also, Sandy, that we're gonna stick with the co-op.
Awesome.
You know, one of the things that I hadn't considered that Christine pointed out is, you know, if we're gonna pay somebody $60,000 to do this or whatever, we're gonna be paying another $30,000 on top of that
Yeah.
in benefits.
Benefits,
So,
yep.
yeah.
so.
Well, that's great,
Yeah.
I appreciate that, cause I feel much better.
Okay, good.
So for the segregation of duties, our plan is that, for any goods that are consumable or items that you would get, Amy Dale is gonna do a purchase order, or Brittany is gonna do a purchase order, and then those are approved by Jim. And then the items are received, but then Nicole is gonna create the invoices, the checks. So Nicole will create the checks. So there'll be a purchase order, there'll be an approver that's separate, and then that person who pays it is separate. So there'll be 3 people touching each item that is a good that you would get.
It's a great idea. It's a really
I
good
like
idea.
that.
So then Nicole, you'll reference back to the POs and ensure that everything is covered and nothing extra is
With the
added.
invoice, yeah.
With the invoices.
Oh, and I should mention Nicole is gonna be our on-site business manager, and
Oh,
so she just lives down in Redwood Falls, so
great,
not too
Mhm.
far of a commute for her, better than Marshall. Yeah, so the plan will be one day, for a little while, it'll probably be maybe 2 days a week, and I have her at the school board meetings, because I think that's very helpful for everyone.
yep.
So I was thinking on the authorized signers, I thought we had taken care of that previously,
I did too.
or we did not.
We are still finding people's names on all sorts of things, so.
Really?
So one thing we do, we send a confirmation to all the banks saying, you tell us how much you have in your account as of this date, and who's authorized to sign it. And there's, yeah, I don't know, is it Joy maybe that's still on one? It's an older account.
We still have, I see,
And
was it before Lindsay Heine?
Oh.
Would that have been summer?
Oh,
wasn't it?
summer?
Yeah, she's
Summer
earning.
O'Neill?
Oh, the summer, yeah.
I even saw Robin Amberg's name on something,
Oh, okay.
so
And,
as we find these, we are,
and maybe one thing we need to do, and Christine and I had talked when she was initially in, but I know there's several bank accounts, but there's probably, I think it was 2 of them that we could very likely consolidate down to, prevent that in the future, that it's gonna have no impact to reduce two of the accounts.
I've just having taken on a lot of that, knowing the number of accounts we have, it's a lot of work.
Yeah.
Mm-hmm.
You wouldn't think having a bank account is a lot of work, but every month trying to get all those statements together, and Christine's laughing.
So how many accounts do we have, bank account?
What do you think? 10? What do you think?
Yeah,
I think it's more.
it might be
Might
more
be.
than that.
It's,
I wanna say it's 12.
Okay, it's a lot.
Both sounds right.
But anyhow, I think we should be pursuing that, and as we get the new signatures on, as the new board is set up in January, it's a perfect time to do both
Yeah.
at the same time.
And I did, the very last thing on the agenda, I did add this, I don't know if you saw this,
I
but
did see
we're gonna
this.
authorize Nicole
Yeah,
to help with this, so then I don't have to do it anymore, and I really appreciate that.
Get it on the cold first, here we go.
So if you include CDs, you have like 22 bank accounts.
but anyhow, I think we should finish up that conversation and do that. It'll
Yeah.
help streamline things for the
Yeah.
district.
Yeah.
So, but thank you, Justin.
Yeah,
Yes,
so
thank you very
for having
much.
us out again. So I'll stick around for the.
And Nicole already has a bold email address, or,
Oh,
yeah, a bold
boy.
email address.
That's legit.
I do.
So
I got it working.
she'll be our on-site business manager then.
She'll be on site one day a week.
Yep, and then somebody's kinda gonna be here, kinda helping out underneath
Yeah,
her
so then
during,
we're gonna have Amy Dale.
yep,
I haven't done anything on it yet, cause I wanted to run this past the board and
Yeah.
people were.
Tonight, obviously.
Yeah, I was just gonna mention it in my board report, but, I didn't expect any pushback on that. So then we'll have Amy Dale, coming up here full-time. Right now, she's part-time up here, part-time in the media center. And she'll take on a lot of that. She's already doing all of the POs but there's a lot of stuff that she can be helping with around this. So we got a pretty good list of duties put together. It's actually very well planned out what the co-op's gonna do and then what that assistant business manager role will be covering.
perfect.
Do you have that you could provide to the board tonight to show that, Jerry?
Yeah, I can do that, yeah.
That would be nice.
I think
to
if you
see it.
show
Yeah, I
that,
think
it
we
would help
see.
for everyone to see it, it would help. It would probably make it easier on you than to try to explain it.
Right.
Yes, I'll go make a print of that.
Okay.
I like that plan.
And then we'll help her, we'll help train her on some things too. So it'll take a little time to get her acclimated, but, she'll work with everybody in the district office, and then Nicole will work with her too on some other things to kind of provide some training.
Okay, thank you.
Great.
All right, are we ready
I like
to
that plan.
adjourn our committee
Are we,
meeting?
Sandy, are you ready?
Ready for what?
Adjourn?
Anything
Oh, I'm
else for
done.
the committee meeting?
I'm done.
Okay, thank you.
All right, thank you so much.
Thank you. We'll see you on the next stream.
Okay, bye.
All right, thank you.
Thank you. I'm glad to hear that.
Yeah.
Brad, we were still in the middle of the committee meeting, that's why I was like.